Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Let's take a look again on the gold market. This market currently extremely interesting as in a short-term as in a long-term perspective. So the recent change that we saw in the inflation report put Fed in a really, tricky situation that could have really significant consequences for the markets, not just for gold, but across the board. Speaking precisely on the gold market, on the daily chart, on intraday charts, we do not have something really new. So mostly here we will repeat the same things that we have said on Friday. But in today's weekly report, we have taken a look at really, very interesting topics. What's going on currently and what potential gold market could have within a few months and in general. So currently, if you will take a look across the recent news and headlines, you could see that the big banks such as Societe Generale, Citibank, starts to change the forecast on the gold market. For instance, the Societe suggests that the average price for gold till the end of the year will be $19.50. And that is actually significantly higher than the current level. So the Citi also increased the forecast for gold. Partially that could come from the Fed position, because they really currently stands in a really tricky moment, since they need to win some time to stretch the time to let market to rise the employment, rise the participation rate. At the same time, they do not know what to do because the inflation is rising, and they are breaking the suggestion to be temporal. Yes, of course, the market makers are shaking the board around every report that we have, but there is no smoke without a fire. So, yes, now they are shaking the boat in favor of the rising of the gold. Later, they will shake the boat to make the drop on the gold, suggesting that Fed will react aggressively and this rate change is approaching. So that definitely will have some bearish pressure on the gold market, but that will be temporal. So currently it seems that within the few months, as was suggested on the last time, and we're talking about this again, gold could have really, let's call it as golden time. So actually, nearest long-term target that we have on monthly chart stands around 21.65. So the history of this target is different questions. We'll not talk about this in the video. So if you would like to know, you could read the report. But it seems that on the monthly chart, but it's a few reasons that we have, gold really could try to hit this level within a few months probably, maybe even faster. We do not know. The relative theory stands currently about background for the gold rising. This is not just things that are obvious right now, speaking on the inflation and the Fed policy and this difficult Fed situation. So this is obvious, but also we just share with the opinions. So the final conclusion is up to you. So whether you think it's correct or not, but we think that the combination of the COVID pandemic that started a couple of years ago and current bottlenecks that we see on the market, this is not the occasion. So we think that this is real diversion or sabotage of the delivery to this attempt to break the long-lasted supply chains. Actually, to destroy China as a major rival of the United States in global trade and in political sphere. So currently, artificially, because of the delaying of the offloading of the cargoes in the ports, increasing the pricing, making more expensive the delivery of the Chinese goods, so making artificial deficit, rising the price of the Chinese goods. And this makes them less attractive for just common people, because they will have to pay too much for the Chinese goods that we, actually have the habit that should be really cheap. So all the other stuff that stands in relation to the electronics, to the chips, and so on. So we think that this is, at least the theories suggest that might be not occasionally. And this is really a very comfortable moment to make the big impact on the Chinese economy, because Chinese economy is very fragile in the social sphere. And the very minor problems that could lead to just bankruptcy of the very small companies and private companies could trigger the big consequences of the big problems in the domestic Chinese economy. So that could really demand big reserves from the National Bank, Public Bank of China, to hold these possible problems. And we see that it indeed might be the reason, at least it is one of the possible scenarios. If we are correct in this suggestion, then the gold really could get not just action to the 2165. This might be really, it really could be a huge rally on the gold market, theoretically. But that is one of the ultimate scenarios. So we're not really the big fans of that. So we're just trying to show you all aspects of the ongoing processes that we see currently in the global finance and global politics that could make impact on the current competition and current situation on the market. So we're mostly moving in favor of the traditional vector of demand-supply conditions and economy driving factors, which tell us that gold currently stands with a bullish momentum. So, and whether our suggestion on some more, let's call it ultimate scenarios with the Chinese economy, this history will tell you whether we are correct or not. So we will see. So, speaking in the shorter term, mostly we have actually the same scenarios that we have on Friday and we discussed on Friday, because picture barely has changed since Friday. Market still stands at resistance. So this is OP target, market sensitive or bad. And we suggest some minor pullback here that could let us to take the long position. Next target will be around 1950, 1960, because this is previous top. And that is also minor XOP from this ABC bottom pattern. This will be right here. Daily XOP stands at 1960. So that's two targets that we have on the gold. Speaking on a retracement, on the 4-hour time frame chart, we told on Friday about possible double ripple pattern, and this ability still stands on the market, because take a look at this recent action. We have first close below the 3x3, close above it. Market has real problem to proceed higher because some investors turns to the profit taking in the short term, mostly speculators, and market sensitive or bad. So here's very low probability that the market immediately keep going higher. More probable that we will get the retracement. And if this will happen, that will be confirmation of the double ripple. We don't have it yet, but the chance to be formed here still exists on the market. So we're still watching for first Fib level 1826 and 1830. As we explained, this is a very important previous resistance level that has been broken. Now it will become the support. So we will see what the shape price will take. Maybe retracement will be slightly lower to next support area. It's confidence. So that's two levels that we're keeping an eye on. So that's actually what we have in the shorter term perspective on the gold market. Finally, guys, the final subject that we have is the situation in the stock market. I am intentionally taking a look at the forecasts of the big banks and overall opinion on the markets currently. Investors starts to fear. So VIX index is rising, or VIX index is rising. Morgan Stanley making a review that they suggest that return on the stocks next year will drop to the 7.5%. And by the commentaries of the big stock companies, ETFs, they're turning to the protection. So they're decreasing their possession on the stock market from the overvalue to the neutral. So some stocks starts to selling. So this is also, we think, that subject that needs to take into consideration. That's what we have discussed in the weekly report. Situation on the daily chart we have discussed just now. So read, decide, and make your opinion on the current situation of the gold.